But definitely, if somebody is willing to hold for 2 to 5 years, yes, it's a buy on every possible decline.
Okay, got that. And now we have Neeraj joining us on the call from Kolkata. Hi, Neeraj.
Hi, ma'am.
Hello. Please go ahead with your question, Neeraj.
Yes, ma'am.
Please go ahead with your question.
Yeah, so I'm holding 5,000 shares of Dabur India.
Okay.
Which I got in the year 1994 in the IPO.
Wow, okay.
Actually I had 6,000, but now I am left with only 5,000 shares, and I am actually 57 years old. So should I sell 1,000 more and buy some Nesco or some other good share which Mr. Chokalangan would suggest? Kindly advise, ma'am.
Sure. And you're looking for a long-term perspective on this one, right?
Yes, madam. Yes, okay. Madam. I can hold on. Time is not so.
Understood, Neeraj. Firstly, congratulations on that massive profit that you've made. 24 lakhs is a great amount, so congratulations. I'm envious of it. And speaking about your investment a little bit on Dabur, right? So Dabur came up with its results. In fact, a lot of consumption companies came up with their results, and most of the companies in the space have reported single-digit profit growth year on year, right? Speaking of Dabur, it reported a top-line growth of 3% and a profit of 1.59% year on year. And Chokalingam, asking this question to you, today, if we speak about the consumption space, there is a big conversation about how urban consumption is sort of outshining rural consumption. Like rural consumption may grow gradually, but urban consumption remains the focus. And plus with quick commerce, taking charge in this space, what do you think about the future of consumption companies? Because a lot of analysts and experts have been saying that the growth from the next 4 to 5 years perspective looks a little subdued. So yes, should Neeraj book his profits because he's sitting on a massive amount of profits and exit and buy on any other counter?
Yeah. There are two parts to your question. One, yes, the consumption story will continue to have a stress at least for another 1 or 2 quarters. There is no immediate sign of turnaround in the volume growth for FMCG. Therefore, Dabur looks stretched in valuation. But the point is that if market turns volatile with a downside risk, Dabur would remain as a defensive. It may not fall badly. So to that extent, the defensive benefit is there. But otherwise, if somebody is aspiring to create a wealth, Dabur is not the right stock in the short to medium term. So since he has mentioned about Nesco, yes, Nesco is my topmost high conviction stock. Personally, also we have invested, and the results have come yesterday. It's excellent results in relative terms for Nesco. And Nesco, the management has mentioned that one of their presentation, the development potential for IT parks and exhibition business is 5 to 6 times what capacity they have. So I still believe in Nesco. That I believe that it will be a great wealth creating story. And apart from that, one can aspire to make significant wealth in 2 more stocks. One is CDSL and second Cyient. So one can consider these 3 stocks: Cyient, CDSL, and Nesco. I believe these 3 stocks would create more wealth than Dabur in the short to medium term. That is roughly about 1 month to 1.5 years. But again, Dabur is better if somebody is core interest is to minimize the risk and being defensive. But somebody is willing to take a risk. These 3 are the best stocks to create wealth as per my research.
All right, Mr. Chokalingam's top picks are Cyient, CDSL and Nesco for a long term. And with that, we have a caller from Bengaluru. Hi, Kumar. Good evening. How can we help you?
Yeah. Good evening, ma'am. Actually,
yes.
I have purchased Cochin Shipyard Limited.
Right.
Okay, at the price of around 1,000.
Right.
Okay.
And how many shares have you purchased?
Yeah, I have purchased around 2,000.
2,000. All right.
Okay. So what I have to do? Whether I have to hold it for some time to book target, or I have to book now itself the target? That is my question.
Okay, and are you looking for a short-term view or a long-term view?
Short term.
Short-term view. Okay, so Amar, coming straight to you, how can you see Cochin Shipyard performing, on the charts?
Yeah, I would say if I look at Cochin Shipyard, what I see is that the stock did correct from almost 3,000 levels if we go back and see. So from almost 3,000 levels, the stock has corrected and currently trading at roughly 50% of that towards 1,500, 1,530 odd levels. However, what we are seeing is that the stock seems to be forming a very strong base and support. So he should definitely hold on to his position because now 1,300, 1,350, that's a very strong support zone for the stock. But for any meaningful rally, the stock needs to sustain above the 1580, 1560 level. That's going to act as an immediate zone of resistance. If that is taken out, then the stock could witness some sharp rally towards the 1800 level. So he can definitely hold on to his position. It seems that the worst is over for the stock, and the stock is displaying some positive momentum in the last couple of days. And sustaining above 1580, 1600, we could see the stock rally towards the 1800 levels.
Okay, and for those who want to enter at these levels, so are these the correct levels to enter?
Yeah, I would say, yeah, this definitely is a good level to enter in Cochin Shipyard because the stock is in for very good consolidation and a breakout is very likely on the charts.
Okay, got that. And now we have Rajesh joining us on the phone line from Bangalore. Hi, Rajesh. Good evening. Can you hear me?
Hello.
Yes, hello. Can you hear me, Rajesh?
Ma'am, KPI Green Energy, ma'am.
Okay.
Ma'am, 800 stock.
Okay.
Average price is 600.
Okay.
January month, ma'am, 70 days of lower circuit, ma'am. 3 days back upper circuit, ma'am. Older sell, ma'am.
Okay. And Rajesh, when did you invest in this stock?
Yes, ma'am. Ma'am, tell me, ma'am.
When did you invest in this stock? 800 shares.
Stock.
Yeah, 800 shares. When? 1 month back, 2 months back, 3 months back? When was it?
Ma'am, 3 months back, ma'am.
3 months back.
Yes, ma'am.
Okay, okay. And you're looking for a short-term view?
Yes, ma'am. 9 months, ma'am. 2 lakhs kanta last, ma'am.
Okay, okay. Got it. I will take this question to Amar. Amar, Rajesh holds 800 shares of KPI Green at 600 rupees a piece, and the stock is currently trading around 367. So almost half of the price at which he bought these stocks. And since he invested them 3 months back, the stock has not done really well from his time of investment. However, recently it hit its upper circuit, 5% upper circuit, following a deal win from Coal India of around 1,300 odd crores. What do you think about the future of the company on the charts? How does it look like from a short-term view?
See, if you look at KPI Green, what we've seen is that in January itself, the stock has corrected by more than 30%. So it has been a savage decline in this particular stock. And I would say just when he bought, because I was listening that he bought somewhere around the 600 odd levels. So that was roughly in January or so. In this month itself, it had made a high of almost 588 odd or so. So from there, the stock has corrected significantly. Right now, it's trying to form a bottom somewhere. It recently made a low of 313. So it's taken support because from the long-term charts, 300, 310, that's acting as a very strong support zone for the stock. However, having said that, if I look at the structure of the stock from an intermediate-term perspective, that still remains negative. But since the stock has corrected from almost, if I go back and see, so its all-time high was 745. From there, the stock has corrected to 313, currently around 370. So he can hold on to his position. And if the stock is able to manage and sustain above the 400, 410, 420 zone, then you can expect some rally. But 600 seems quite difficult, at least in the short term. That's what the charts are suggesting.
All right, so that's the view coming in on KPI Green. With that, we have a caller from Bengaluru. Hi, Sanjay. Good evening.
Hi, ma'am. Good evening, ma'am.
How can we help you, Sanjay?
ma'am, you know Minda stock name. You know Minda stock name.
Yes.
200 stock.
Mm-hmm.
Average price 990.
Right.
One month back stock buying. 3 month old, ma'am. Short term, ma'am.
Okay, short-term view on Minda. So, Amar, coming to you, the stock was up 4% today and is currently trading at 943. Sanjay bought it at 990. So, do you see the stock reaching that levels in 3 months down the line?
See, if you look at the stock really has been trading very sideways over the last, I would say, 6 to 8 months. So the stock has clearly been for consolidation because the stock was unable to breach the 1,000, 1,100 level. And on the downside, the stock is supported on the 850, 900 zone. So I would say he can hold on to his position, but given an opportunity, one should look at an exit opportunity here because the stock could go in for some consolidation. Until the time we don't see the stock sustaining over the 1,000, 1,020 levels, it is likely to consolidate. So he should look at an exit opportunity once he gets that.
Okay, so it's a sell on Uno Minda. And let's segue to our next caller. Anthony is calling from Hyderabad. Hi, Anthony.
Hi, ma'am. How are you doing?
I'm doing well. Thank you for calling Ask Profit. Go ahead with your question, please.
So I have a capital of 1 lakh, and tomorrow as the budget is going to come out, so I would like any one stock wherein I can invest for a short term of 6 to 8 months is what I'm looking for, ma'am.
Okay, and do you want to invest all your money or a small portion of it?
I can do like 2 stocks 50-50, or I'm fine with the full capital in one stock as well.
Okay, got that. Chokalingam and Amar, I would like to know both your views because quite an interesting question. Budget is going to be announced tomorrow, and there's a lot of conversation about the kind of sector-oriented, announcements that our Finance Minister Nirmala Sitharaman could make. While Capex obviously is one big focus, and when people talk about Capex, a lot of sectors and themes come to play. But however, given how the government also has to focus and contract fiscal consolidation, how do you think this theme could play? What are the stocks that you think could shine? And please go ahead and recommend some stocks to Anthony if you can. So Chokalingam, take it away first.
I'm extremely bullish and optimistic on the budget. It should give a lot of tax concession to lift the disposable income, and that should help GDP growth to improve. Also, I would not be surprised if Finance Minister gives some concession to investors because over 64 lakh crore of market cap got wiped out in the last 4 or 5 months from its peak. However, I always maintain the stand that it's very difficult to relate the budget measures to individual stocks. Yes, a lot of people relate in terms of absolute amount, but when you calculate down to company level at EPS level, I think it would be very difficult. So, and also the viewer mentioned that 6 to 8 months, but I'm afraid that if he listens to me, he might even lose money in the market because my stocks take minimum 1 year, sometimes even 2-3 years to play out. So I would request my colleague, technical analyst, to answer that question.
Okay, and Amar, what's your view?
I would say that he can definitely see this is again based on the budget, but otherwise also HDFC Life is a stock which he can definitely look at investing from a medium-term perspective because the stock is on solid ground, and we've seen that the stock correct also, and it's around very crucial support zones, and this seems to have formed a bottom. So this is one stock he can look at parking at least 50% of his funds in this particular stock.
All right. So that's the view coming in. With that, we have a caller from Ujjain. Hi, Rajesh. Good evening. How can we help you?
हेलो जी मैडम, हाउसिंग सेक्टर में कौन सा ले सकते हैं अफोर्डेबल हाउसिंग में?
ओके, ये आप इसलिए पूछ रहे हैं क्योंकि कल बजट आने वाला है?
हाँ जी मैडम.
Okay, so a lot of budget related queries, of course. So Mr. Chokalingam, I would like you to pick some stocks in the housing sector because everybody is focusing on the budget, and I know that but that's not the correct way to pick a stock, but still if there's any recommendation in the housing sector.
Certainly, we have a buy recommendation on PNB Housing. Recently, we initiated. Fabulous results. Profit has gone up by 43% in December quarter on year-on-year basis, and also price to book value. It's very, very attractive at around 1.3 times price to book value. So I like this stock, and I have a strong conviction. And this housing finance company also has focus on affordable housing. They started with a small base, but on a small base, the growth has been very impressive. So I would recommend PNB Housing.
All right, PNB Housing for long term. And Amar, what do you have for the short term?
If one wants to trade from a short term, so I would say that one can look at Tata Steel from a short term perspective, because there could be some up move here from the levels where the stock has corrected. It's currently around 130 odd levels, has formed a very strong base. One could expect a rally towards 150, 160 from a short term perspective.
All right. I hope, Rajesh, your query has been answered. And with that, we'll have to slip into a short break. Viewers, please keep sending in your queries on WhatsApp and call in. We'll be right back for Ask Profit. Stay tuned to NDTV Profit.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you. STT definitely needs to change.
Old tax regime.
The 1991 budget was truly a game changer.
I mean, the rest is history.
Union budget.
Budgets. General elections. Union budget.
2 more, Yashwant Sinha and P. Chidambaram.
Arun Jaitley. Arun Jaitley, I'd have to say.
I think Manmohan Singh for sure, because of the iconic 1991 budget speech.
STT.
Welcome back. You're watching Ask Profit only on NDTV Profit, and we're being joined by Chokalingam on the fundamentals and Amardev Singh on the technicals. Viewers, just a quick reminder that this is your chance to get all your stock-related queries answered. So don't forget to call us on the numbers that are flashing on your screens at the moment. And let's directly go across to our first caller after this break. Karimullah is joining us on the phone line from Andhra Pradesh. Hi, Karimullah. Good evening.
Hi, ma'am. Hi, everyone.
Hello.
Yes, ma'am.
Please go ahead with your question.
Okay, ma'am. Thank you very much for giving this opportunity. Actually, my query is regarding Bajaj Housing Finance.
Okay.
Actually, I had 500 shares of Bajaj Housing Finance, average at 175 rupees. Or later, when it was going down, I have sold and booked the profit at 165 rupees.
Okay.
Now it is trading around 115 rupees.
Okay.
Is it my two questions are, number one, is it the right time to enter in this stock? And second query is, why this stock was corrected around 40%?
Okay. Why did the stock correct around 40%?
40%. And second one is it the right time to enter in this stock?
Okay, so just reiterating your question, you hold 500 shares of Bajaj Finance at 170.
No, earlier.
You used to?
No, I have sold.
Okay, you have already sold 500 shares.
Yes, ma'am. When
so
it was around 180 rupees,
okay.
I had entered. And later, when it was coming down, I averaged. It's around 175 rupees. I was having 500 shares at 175 rupees. Later, when it was going down, I have booked the loss.
Okay, got it. So, are you looking for a long-term advice on this one?
Yes, ma'am, long-term. It's around 2 to 3 years.
Okay. Chokalingam, as you must have heard, Karimullah, he's interested in Bajaj Housing Finance. In fact, he held 500 shares at 175 a piece. And as he rightly pointed out, the stock is currently trading around 115. And the stock has been volatile after its Q3 results. Would you, could you also list out a couple of reasons for the correction that the stock has seen quite recently? And what's the reason behind the despondence on the chart that we're seeing?
Oh, yeah, I heard him fully. With due respect to him, the right question would have been why did it go to 188, not why did it lose from 188? Because I would suggest every investor, to look at the fundamentals. If they don't have the ability, they should go to mutual fund, because at 188 it was trading almost around 8 to 9 times book value. So if any finance company is trading at 8 to 10 times book value, yes, Bajaj Finance used to trade at that level, but then Bajaj Finance story those days was different. The kind of growth, year-on-year growth it has posted is fabulous. So now a lot of competition has emerged. So the Bajaj Housing Finance is not able to grow like how Bajaj Finance grew in the past. So definitely extraordinary valuation was stretched at 188. So that is why it has corrected a lot. It's a great company. It's a great stock to hold for long term, but even at the current price, it is still trading at around 5 to 6 times price to book value. So it is still stretched. So I would give buy recommendation on the basis of my understanding of research. If the stock corrects below 100, that too for long-term investors.
All right, so that's the view coming in on Bajaj Housing. With that, we have a caller from Hyderabad. Hi, Abhilash. Thanks for calling in.
Yeah, hi, madam. Good evening. Thank you, Choka sir and NDTV for taking my call.
It's our pleasure. Please go ahead with your query.
Yeah, I'm great admirer of Choka sir. Sir, could you please answer which time is the right time to pick the sugar stocks or cement stocks in the cyclical way? And one more question is what are all the stocks which we can bet on dividend and wait for wealth creation? Thank you so much for taking my question.
All right, Mr. Chokalingam, you have made quite a lot of fans there. So coming to you, what's your take on the sugar and cement sector?
Yeah, sugar stocks, it's roughly once in 3 years it is cyclical. The best time to buy sugar stock is when the sugar industry is on the downturn. When they are making losses. It's not that you would love losses, but when they are making losses and sugar prices are down, that time you should understand whether in the immediate near future, 6 months, 1 year down the line, whether there is a possibility of turnaround in the industry. It's not that difficult. You have to wait for stress, and once you see the stress in the industry and you look at the production, consumption, price, inventory with the industry. So if you understand that the turnaround is to happen in 6 months to 12 months, that is a time to buy. And which stock to select, see that at least debt on the book, because sugar companies crush sugar for 3 to 4 months, but they hold on to sugar for 12 months. So the inventory is so huge, particularly at the end of March. So that means there is a lot of working capital needs, a lot of interest payment to involve. So therefore, the second criterion is to look at the sugar companies who have got at least get a net cash company. And third one is the recovery rate. So that is the amount of sugar they generate by crushing the cane. So anything above around 11% would be the ideal one. So these are the now the things are quite tough for industry, but still somebody is looking at sugar in space. One can look at the KCB Sugar. It's a net cash company, plus it has got all other assets. Cement, I think it will take another 1 or 2 quarters to turn around. Even December results is going to be bad for most of the cement companies. Still, we have a buy recommendation on KCP Limited. I personally do not hold, but I believe that it's a fabulous company, diversified company across various verticals. KCP Limited has, it's a different from KCP Sugar. KCP Limited separately listed, and it has got a sugar, it has in Vietnam, highly profitable. It has got a hotel business in Hyderabad. It has got an engineering division which recently broke even or turned around. Then it has got a cement business in Andhra. Plus, it has got 5 sources of energy, and it's a net cash company. It might test the passion. The results may be a little bad. So next week when the result comes, if by any chance a stock corrects deep, I think that would be the great time to accumulate for medium to long term. I have been recommending as a potential multi-bagger in 2 to 3 years time frame. But it comes with risk being a small cap and a commodity business.
Okay, thank you so much for that holistic view on both the spaces, Chokalingam. Let's go across to Kishore. Kishore is calling us on the phone line from Bangalore. Hi, Kishore. Good evening.
Hi, madam.
Please go ahead with your question.
How are you? Zee Entertainment, I have 1,000 shares at a price of 170.
Okay.
For a long term, we are looking, ma'am.
Okay. And Kishore, when did you purchase these 1,000 shares?
During the 23 December, January, there is a merger plan with Sony. That time I purchased, madam.
Okay, so a very recent purchase. And did you buy these shares together, collectively in one go?
No, madam. Around 210. Average price that is 170 now.
Okay, average around 170. Okay. And do you want a long-term view on Zee Entertainment?
Yes.
Okay. Chokalingam, we will take this question again to you because our viewer wants a long-term perspective on Zee Entertainment. He holds 1,000 shares of this particular company at 170 a piece. That's his average price. And the current trading value of the stock is 105. So a couple of bucks lower than the price at which he bought. Plus, Zee Entertainment, an interesting factor about Zee Entertainment at the moment that I just read before this query was taken is the fact that although it reported a 180% jump in its net profit in Q3, but the total income declined by 3% given weak festive demand and also softening revenue in advertising. Now, what do you think about Zee Entertainment from a long-term perspective? Do you think it is profitable to hold on to these shares?
Oh, valuation is stretched. You're absolutely right. Things have improved slightly. But if you look at the annualized EPS, the stock is still trading at around 25-30 PE. But to be fair to the stock, stock also already corrected a lot. So one can hold the stock, hoping for ZTV possibly joining any further consolidation process. So one can hold it. Maybe 15-20% recovery is possible.
All right, so that's the view coming in. With that, we have a caller from Bengaluru. Hi, Chandrasekhar. Good evening.
Good evening, madam.
How can we help you?
Madam, I have hold IRFC 5,500 quantity.
Okay.
At the rate of 175.
All right.
Already losses 1,10,000 rupees losses, madam.
Yeah.
Madam, how many times coming our price?
Okay, and are you looking for a short-term view on it?
Yeah, short-term view, madam. Already holding 3 to 4 months, madam.
Okay, so you bought it 3 to 4 months back and you're looking for a short-term view on it because currently it's trading at 151. You bought it at 170. So, Amar, coming to you, since, we've been keeping you waiting for some time as there were many long-term queries there on our show, but here's the query for you. How is IRFC faring on the charts? Because in its quarter 3, results, the total income was up 0.4% and net profit was also up 2%. So do you see, is it advisable for Chandrasekhar to keep holding the stock for another 3 to 4 months?
Yeah, I would say that he should definitely hold on to his position right now because what we've seen is that the stock has corrected from almost 220 levels and all to 140, and then it has pulled back. And we are seeing some sort of bullish momentum there on the charts for the last couple of weeks. And what we see is that somewhere on the upside towards 155, 165, that's a zone of resistance for the stock. From a longer term perspective, the trend remains positive. So I would suggest that he should definitely hold on to his position. Sustaining above 160, 162 is the first signal that the stock is in for some upside rally. And as far as support is concerned for the stock on the downside, 138, 140 should act as an immediate support for the stock.
Okay. And now we have Prakash calling us from Tamil Nadu. Hi, Prakash.
Hello, ma'am.
Where in Tamil Nadu do you come from?
I'm from Hosur.
Oh, wow. Hosur, that's near Karnataka border, right?
Exactly, all right, ma'am.
Okay, please go ahead with your question.
Madam, I have a stock called Kine Technology.
Okay.
500 quantity.
Right.
I bought it at the rate of 1,240 rupees.
Okay.
My long-term view, just I wanted to make it double from here.
Okay.
So I don't mind waiting for.
Got it. I appreciate your patience because you don't mind waiting. However, I'd like to ask you, when did you purchase these 500 shares?
Very recently, madam, just 1.5 months back.
1.5 months back. Okay.
Yes, after that it has been touched 1,600. I have not sold because my view is very longer time. At least I wanted to make it a double.
Okay, understood. Okay, let's take this question to Chokalingam. Chokalingam, as you may have heard our viewer, he holds 500 shares of Kine Technologies at 1,240 a piece, and he wants a long-term view. Now, the stock is currently trading around 1,091 and has fallen about 2.5% in the past 5 days, and say 1 month, it has again seen cuts of around 30%. What is your view on this stock from a long-term perspective? Because our viewer wants to double his investment.
Yeah. So I heard him fully. See, first of all, Kine Technology is a great company. It's a good company. So investor like him should understand the difference between a good company and good valuation. Is it reasonably valued to make a lot of money in the long term, or what you are supposed to get in the long term, whether already it is priced in? These are the two questions one should ask, or one should make a difference between what is a good company and what is a good valuation. To invest in the stock and try to make a doubling in 3 year, 5 year, the stock should fulfill both. It has to be a good company. It also should have a good valuation. Now, it's a great company, but the valuation is not great. If you look at the latest quarter earning, and if you analyze roughly, it's trading at around 50 PE. So what is going to be achieved in 2-3 years down the line, already it is priced in. So therefore, I do not think one can double in 1 to 3 years. Yes, one can hold it for 2 to 5 years. Ultimately, will make money, but whether one can double money so soon, I have my own doubt. So it's a hold for long term, certainly.
All right, so that's a hold on Kine Tech for long term. With that, we have a caller from Coimbatore. Hi, Keshav. Good evening. How can we help you?
Hi, thanks for this call. This query is regarding the IREDA.
Yes.
Share. I'm holding around 1,001 shares.
Okay.
And with an average of 206.71.
Right.
So here my plan is to hold this for next 1 year.
Okay.
But is it good to hold for 1 year or
yeah, because currently the stock is trading at 202, basically hovering around the same levels that you've bought. So, and it was up 3%, over 3% today. And in the last 5 days also, the stock has picked up. It was up over 8%. So, Mr. Chokalingam, coming straight to you quickly, if you have a view on IREDA, how are the fundamentals of this company looking like?
It's a good company, but it trades at 5 times price to book value, which is extremely stretched when you have even bank like HDFC Bank, Kotak Bank are trading at 2 to 4 times. So I would give a sell rating if a stock improves even another 5-10%.
Okay, and do you have any other suggestion apart from it?
Well, as I mentioned, one can look at PNB Housing. that stock has corrected a lot, but extraordinarily attractive at the current valuation. I personally do not hold PMBOs.
Okay, and now we have Ram Babu joining us on the phone line from Hyderabad. Hi Ram Babu, please quickly go ahead with your question.
Yeah, good evening, madam. Actually, I brought Tata Motors at 993 rupees with 1,000 shares.
Okay.
In 4 months back.
Okay.
Now it is about 715 or something else. Can I hold for longer view or any further dip is there?
Got it. Chokalingam, long-term view on Tata Motors, the stock has seen some correction, has dropped around 38% in the past 6 months and is seeing pressure after its Q3 results. Takeaway.
Yeah, one can hold it with a target of around 800 to 850 for the long term, but short term, I doubt whether it can make money because I am negative on the entire passenger vehicle segment. But one can hold for long term with a target of 800 to 850.
Got it. Thank you so much, gentlemen. Thank you, Chokalingam ji, and thank you so much, Amartya Singh, for joining us on this edition of Fast Profit and answering all our queries. Thank you so much, gentlemen. That's all the time we had on this edition. And viewers, thank you so much for joining us and sending on all your queries. You can continue to call us on the numbers that's flashing right on top of the screens, and you can also write to us on WhatsApp so that we continue taking your queries and giving you the best advice possible. And for more news and updates, stay tuned to NDTV Profit.
I'm joined by Man of the Day and Architect of Economic Survey 2025, Chief Economic Advisor V. Anant Nageshwaran. Welcome to NDTV Profit, sir. I would like to start with a question on that survey projected GDP growth for FY26 in the range of 6.3 to 6.8. Now, what are the key factors you have taken into account, while pegging this growth, which is below 7%?
Look, basically the one straight answer to that question is that the global factors are going to play an important role. There are risk factors such as we have mentioned it, there are risk factors such as the potential for spillover into India from global financial market trends, etc. And in general, I think there is increasing uncertainty with respect to trade and investment flows. So we have taken that into consideration in projecting this growth number. And this is also very consistent with some of the growth projections that multilateral agencies and other private sector agencies have made as well for FY26.
Right. So on the survey, a lot of emphasis on the deregulation part as well. And in fact, the survey is suggesting states particularly to, get out of the way. But how government can ensure or kind of nudge states to sort of participate, deregulate, and make the compliance easier, to have a more ease of doing business, which could perhaps improve the business output?
The union government doesn't have to nudge them because several states are already on that path. And we have also shown in the economic survey that the business reform action plan, whichever states have implemented them very well, they have seen a good pickup in industrial activity in their states. And that is a big enough motivation in and of itself. That is a good nudge in and of itself.
True. But somewhere, sir, the survey didn't really touch upon the urban slowdown in the consumption side, in the urban demand. And, in fact, you keep reiterating that, first half numbers is a temporary blip and second half of the year is looking much better. But at the same time, FMCG companies are, in the second quarter also talked about the slowdown. even in the third quarter, it's looking gloomy. So why there is not a specific mention there, and how government should tackle that consumption in the urban cities
I think,
particularly?
The chapter on the state of the economy does have a discussion on the consumption trends, including in urban India. And I think what we have said is that there are signs of pickup in urban consumption as well. And recently, for example, 2 days ago, the government notified one of the important schemes it announced in July 2024 budget, the credit guarantee scheme for small enterprises. That will definitely boost manufacturing in the small and medium enterprises and hiring as well. And more importantly, part of the urban consumption slowdown is also a function of how private sector itself has to take a very hard look at its own hiring and compensation practices.
True, sir. Also, on the very interesting part this time that the survey is, kind of making a case in terms of regulating overtime, working hours, saying that, overtime should be paid by the employers. But at the same time, private sector is advocating for longer working hours. So, kind of how you think that, regulating these working hours would improve the growth, would help in the overall scheme of things?
No, we are not getting into the conversation that is happening in the private sector about the number of hours per week, etc. That is not the point here. And I think there is no need to conflate or confuse that discussion with this. This is separate. All that we are saying is, again, from the perspective of small entrepreneurs, when they get big orders during particular seasons, they can have the flexibility of being able to enlarge the working hours and then being able to reduce the working hours in lean periods. Because several countries do take into account this kind of seasonal fluctuations in demand and allow small enterprises to meet their criteria of sticking to stipulated working hours per week over a period of 3 months or 6 months rather than on a every week basis. That is what we were talking about in the economic survey.
But you think, sir, somewhere this entire kind of system which is playing out, more hours into work is somewhere affecting the growth also?
I'm not getting into that debate at all.
Okay, so moving on, survey did emphasize again on the multi-prong approach as far as, ultra-processed foods are concerned. In fact, survey is suggesting to have a health tax on such brands and companies. Could you please throw some light on that?
No, we basically said we're not proposing anything. We're just saying that from the point of the governments around the world, including in India, we have looked at tobacco as an important health threat and accordingly use fiscal policy also as a lever to discourage the habit formation with respect to using tobacco, cigarettes particularly, etc. And that's precisely is the same kind of health hazard that arises with respect to ultra-processed foods. I think that is a broader message. The message is not about specific fiscal or government intervention. Many a thing needs to happen outside the government as well, and that is where I think things like front of the pack labeling and consumers themselves becoming aware of the connections between consumption of ultra-processed foods with not only with respect to physical health but also their mental health. Those are all the dimensions that we wanted to bring out in the economic survey.
Right. One more important point has been underlined in the economic survey about the artificial intelligence, surpassing human performance in critical decision making. Now, this can result in a large-scale labor displacement. So, survey emphasizing on AI is coming when India is kind of aiming to build our own AI model within 4 to 10 months. So, what does survey imply here?
No, I think that technological innovation needs to continue to happen. That is a separate dimension. But more importantly, I think what the survey points out is that given the country with a large demographic bulge, a youthful demographic bulge, we need to make sure that we prepare the youth to be able to take advantage of this technological developments and innovations happening and breakthroughs happening. At the same time, we also need to be mindful of the fact that previous industrial revolutions have had large disruptive influence on the labor markets in advanced countries when they were going through earlier industrial revolutions 2.0 and 3.0, etc. So we need to learn from those experiences and try to smoothen the path of integration of technology so that it becomes labor augmenting rather than labor displacing. That is the broad message. I don't think the current state of the technology, although we acknowledge that it is evolving very rapidly, the current state of technology with respect to artificial intelligence is not there yet to be able to displace labor deployment extensively. But if we were to get to that point, we need to be mindful of how to prepare the population to be able to take advantage of these developments rather than be reactive about it. That's a broader message there.
Correct. Sir, quickly on the line that, survey also underlined a lot of, import reliance as far as, EV sector is concerned. So could you throw some light that how government you think should combat this and to have more measures to boost domestic manufacturing and, in the current scheme of things?
The government has been combating that. In fact, we have PLI schemes on solar components with respect to solar energy generation. We have incentivized domestic production of solar panels, modules, cells, etc., and they're already beginning to show results. The same thing with respect to the EV, electric vehicles value chain as well. So the government has been aware of the importance of developing domestic supply chain capabilities in these two priority areas. So government is doing that. At the same time, the pace of growth in these areas will also necessarily mean that for some time to come, we will also depend on imported components from a single source, which naturally raises certain concentration risk. So the message is not just to the government, as you keep implying in your questions. The message is also with respect to the private sector that we need to be probably doubling our investments in R&D or doubling our efforts in that space and also find alternative sources of supply, even if the cost is slightly higher, because we need to think about some of these things strategically rather than from a short-run perspective.
Indeed, sir. Last question on the agriculture sector, sir. The survey is talking about that this is one of the key growth drivers, and I quote that it needs to be freed, empowered to diversify away from water-dependent crops. I just wanted to understand, you also mentioned about there should be a private investment for small-scale farmers. So if you could clarify those lines, sir, what exactly survey here pointed out?
It's already happening in other sectors of agriculture. In allied sectors, private investments are happening in the cold storage chains, in the distribution channels, and also it is happening in land leasing and contract farming. It is, for example, even farmer producer organizations in some states like Maharashtra, etc., which have developed a complete wine related crops, etc. So the private sector investments in some of these areas are happening already. And those sectors, those allied services or allied activities in agriculture are growing faster than the growth in traditional crops and grains, etc. And that is what we were alluding to. And we can replicate some of those developments happening in other related sectors inside agriculture in the traditional area as well. And that will boost overall productivity and its contribution to gross value added.
Thank you so much, sir, for taking out time for NDTV Profit.
You're welcome.
STT definitely needs to change.
Old tax regime.
The 1991 budget was truly a game changer.
I mean, the rest is history.
Union budget.
Budgets.
General elections. Union budget.
Two more, Yashwant Sinha and P. Chidambaram.
Arun Jaitley. Arun Jaitley, I'd have to say.
I think Manmohan Singh for sure because of the iconic 1991 budget speech.
STT. STT definitely needs to change because now if returns are not that good, it'll start pinching people.
Income tax.
I think income tax because that's what matters to me.
Old tax regime. Depends. Old tax regime currently.